Taking a look at futures in the red right now, but we've got to remember the S&P did close at a record high yesterday. Give me a sense. How do you see today shaping up, of course, with the big news later today, the rate decision in the Powell press conference?
Yeah, I would expect the statement to be very much in line with some of the recent commentary of the Fed, and we are going to get the new summary of economic projections. I'd expect those to be more of a mark to market and continue to pencil in, I would imagine, 3 eases for this calendar year, but we'll be paying closer attention to the Q&A in the press conference.
All right. So with that in mind, by the way, your WEX word of the day today is Fed. It makes perfect sense, I think, to anybody watching right now. But I want to get back to that rate decision and also the path forward for the Fed. You say it's very binary. We just had a bunch of guests on saying it's kind of nuanced, but you're saying it's a very binary situation right now.
That's right. We're looking to play for a range of outcomes. We either see more of the same, meaning sticky inflation, wage pressures continuing. The employment picture is coming into balance, but probably a little slower than the Fed would like. So we either see that scenario where the Fed, it possibly pushes back Fed hikes, and we potentially could get 0 or 1 or 2 Fed hikes this year, or we see a considerable potential for considerable weakening in the economy as rates right now are restrictive. The longer they stay here, there are many segments of the economy that don't work out so well. For instance, like commercial real estate.
All right, I just want to clarify. You said 0, 1, 2, or 3 hikes. I think you meant to say cuts, right? We could see 0, 1, 2, 3 cuts.
I'm sorry.
Yeah.
I did say cuts. And thank you for paying attention this early morning.
Well, you know what, Mimi, that's my job. And your job is to look for opportunities in the markets. And I know you're not giving us a stock pick, but you're giving us a general sector pick today. I really want to dig into this with you. Your pick is infrastructure. So I want to ask you, why infrastructure? Why right now? And in your mind, is infrastructure impacted by the Fed decision and cuts?
Yeah, so we've liked infrastructure for some time, but we continue to see further upside. We think infrastructure can outperform the broader markets. It's supported by the Inflation Reduction Act and many other segments, and we don't think that it is dependent upon rate stabilization or rates coming down per se. We do think there's broad support for the sector.
And by the way, we're showing the audience, these are not your picks, but there's a bunch of ways to play infrastructure. The materials sector often seen as one way to play it. Some other ETFs as well, IFRA, the PAVE ETF as well. So right now, of course, again, we're waiting for this decision. We're in a higher for longer. You say some parts of the economy are going to be hurt by this higher for longer. Infrastructure is a place you'd put some money. But I want to talk to you about the consumer. If we see these rate cuts push back more, how does that impact things like consumer discretionary and consumer staples in your mind?
Yeah, so, I mean, I think the consumer has gotten used to these higher rates, but at this point, savings have been drawn down. So the longer we stay here, we do think there'll be a drag on the consumer over time. We do have the resumption of the student loan payments that occurred last fall. So it's more of a matter of just, if we are higher for longer, there will be a drag. It's going to affect mobility and housing, for instance. Okay. Current mortgages are okay, but looking forward, it will affect those things.